We can get right into the meat of today's episode, components of an STO ecosystem. Kyle, tell me, what is necessary for a security token infrastructure and ecosystem to thrive?
Well, the first thing that we're going to need is something that we've highlighted many times and that is being developed as we speak, which is the regulatory clarity defining securities laws for security tokens. And so we need the regulation and the legal protections for security tokens to be treated and handled just like traditional securities. We need the definitions to be the same so that we can interoperate between all of the different jurisdictions to allow for that globalized capital market. And it all starts with the regulators being consistent and agreeing with each other, as well as complying with traditional financial securities laws. So regulatory clarity, first piece.
If I had to sum it up, Kyle, it sounds like you need legal acknowledgement of security tokens in the region, in the jurisdiction.
Consistent legal acknowledgement, across the board in the same way so that we don't have any debates or issues. From there, we need the issuance platforms and the protocols to enforce that regulation. This includes the technology solution that builds the token in a regulatory way, right? So you have all of those different laws, all the different requirements and the compliance pieces programmatically built into the token, the underlying technology, so that when you're working with different exchanges, different investors, it's all systematically performed and there's no issues regarding what those compliance standards are. This also includes the blockchain piece of the transaction, right? So that you're logging and managing all of these transfers on the blockchain across jurisdictions, and that can all be compiled in one place to be able to audit those financial transactions and be able to see which tokens are going where. So that issuance and protocol piece allows for the proper enforcement of the regulation standards that we just defined in the first step.
So the stakeholders know that their security token is legitimate, and now they have an option, a solution to go ahead and leverage to make sure that their token is legitimate.
Exactly. The third piece is the assets. We need the assets that can be built on top of the protocol, and that those are the actual assets that we want to tokenize, right? So we're talking about a lot of these different pieces all throughout these podcast episodes, but real estate certainly seems like one early here that is a very great candidate and use case that we've all have been seeing from a mile away that can be traded, that can be tokenized. And the importance here is that we're talking about international investment in localized properties, being able to invest from around the world and participate in those things. And whether it's a localized property or whether it's a closed market like what we see with sports contracts or like what we see with some of these late stage equity that even is starting to develop peer-to-peer markets, but we need these markets to develop. And what the first piece of that's important is those assets that hold value, that are not just speculative assets that are kind of just a goofy investment opportunity, but high quality assets often backed by real world things, whether it's book value in equipment factories rather, and or whether it's real estate itself, something like that really backs that asset. The fourth piece is having a broker to help find investors for the assets, right? So we're talking about you need somebody that'll be able to take this asset, this investment offering that you've built the terms, you've built the structure. Now we need to show investors this vehicle. We need to show investors this opportunity and find the funding for the primary offering. And so this involves a strong investor network that is aligned with the specific investment opportunity, both in terms of the fact that it's a financial instrument that is maybe a little bit more progressive, as well as the fact that it's a specific type of security token, right? So different investors are going to be interested in different things. So having the aligned investor network with that asset is crucial. And then we need exchanges that will then be able to manage the transfer of these things over time. I don't need to explain that a whole lot. And finally, custody providers need to act on the investor's behalf in terms of taking that liability, managing the asset, and being able to facilitate all of the post-issuance services that are needed. And that's kind of what our security token ecosystem looks like. But then there's a few other pieces here in terms of the global trade.
Yeah, no, I think you did a very good summary here, Kyle. I think ultimately over the last 3 years or so, since the latter end of 2017, we've seen the introduction of security token technology. And over the last couple of years now, we are developing that ecosystem and that infrastructure. And you've done a great job of kind of talking about all the different players that are needed to make that happen. In 2017, we saw the emergence of the very first security token kind of concepts. In 2018, we saw a huge spike in issuance platforms and protocols, if you will, designed for security tokens come to market. This year we now see that next year in 2020, we could probably expect something like 50 plus different exchanges to be live. So we're the infrastructure that we're acknowledging, this ecosystem, although may seem kind of obvious around the different parts, they're still being built. They're coming into existence. We now actually have security tokens being issued. We've seen over a dozen jurisdictions go out and actually define legally security tokens so that they can be enforced. We've seen a huge concentration of just issuance platforms in the US and Europe alone come to market, all with a different approach, using different technologies or different pricing models to go ahead and issue security tokens. We, of course, have seen the rise of even broker-dealers and investor networks entering into the space. We had originals like Entoro here in this space, but even new broker-dealers like Tritarian Capital or even Harbor and TokenSoft getting their licenses. Just last week alone, we announced Watchdog Capital as yet another broker-dealer in the space. Of course, in Japan, we saw that SRO of 6 different investment banks get set up. Those are all broker-dealers looking to establish networks and become security token, network players. And then finally, of course, even just today, we've talked about a host of custody solutions being integrated, new partnerships, new solutions coming to market. It's very clear. We even did an episode on custody, I think back in September, where we covered a wide range of solutions. It's certainly clear that the market is starting to adopt them. Fundament Group partnered with DAX today to prove to everybody that they have a sophisticated and institutional grade custody solution. And they, as an issuance platform, have started to develop the infrastructure in Europe. But it's interesting now that we've kind of gone over all these different parts, Kyle. We see kind of in Japan where there's certainly a movement towards the institutions with the brokers, but they only have Securitize really as sort of a protocol out there, right? So there aren't a lot of issuance platforms, whereas in Europe, you have a lot of issuance platforms, but there are questions around where do you go to list these assets. The exchanges aren't quite ready yet, whereas, of course, here in the US, it's probably the closest we have to a full tilt infrastructure being complete. We have a bunch of tokenization solutions. We have exchanges that are trading tokens. We're certainly not all the way there when it comes to the regulatory clarity, and certainly I think there could be a proliferation amongst the broker-dealer networks where we really see a sort of driving force enter the market there. But ultimately, around the world, all these different regions are kind of developing their infrastructures, and so now we have a better idea, hopefully, as listeners, a better understanding of how these infrastructures are coming about and how we can analyze and identify the strengths and weaknesses of different jurisdictions.
Yeah, and it's exciting to see the differences in strategy for all of these international jurisdictions as well, right? I think that it is best for innovation that they follow different paths. And so with Europe expanding on the tokenization of real estate that they focused on and actually providing the issuance for these great assets versus the U.S. trying to pave, the most regulatory, the highest compliance standard approach, I think, is the way that the U.S. certainly has approached it with their, private securities exemptions and really trying to set some kind of legal standard. It's slower, but I think that those compliance measures are important for the rest of the world as well, and many other jurisdictions are trying to follow in the same footsteps. So,
yeah, I think that applies also to how we're going to see these STO ecosystems evolve around the assets themselves, right? If we look at different players such as Merge or Malta where they're on an island. It'll be interesting to see where they end up focusing their assets. Do they end up becoming sort of a global exchange for all types of private companies and real estate opportunities, et cetera? Or do we see some sort of focus on oil and energy, for example? We've also seen, some of the lesser obvious ones. Of course, real estate and private companies are obvious because they're illiquid today, and they are massive, trillions and trillions of them. Whereas, a couple episodes ago, we started talking about this very recent innovation done by Spencer Dinwiddie in terms of tokenizing his contract by the NBA. We kind of talked about this as this new sort of form of sports finance that could potentially develop as a result of the security token industry. So distilleries is kind of another niche example of that can kind of fall. There's all these different use cases that are going to come about. And so it'll be interesting to see if ecosystems themselves focus around different asset classes and how they, of course, like you just mentioned, Kyle, will interact with other ecosystems across the globe based on the different regulations and different offerings and different technology solutions in those respective ecosystems.
Well, that's very well said, Herwig. I could not have said it better myself. And I think with that is episode 19 drawing to a close. Next one is episode 20, which is exciting. And thank you all for listening.
Of course. Thanks for being great listeners. As always, send us your feedback, comments, and let us know about any news. Come join us on stomarket.com/news if you want to submit information or get the latest about all the things security tokens.
Talk to you next week.